All right, we have the FOMC minutes out today. We have Nvidia earnings after the bell. We've got a lot going on. The market actually responded positive to the FOMC minutes. You never know what you're going to get with these Fed minutes. It used to be where the Fed minutes was like nobody really cared, okay? But now with Fed playing such a critical role now as the market continues to pull back, the market's increasingly looking to the Fed every single day to figure out where's the bottom in this market at. And so we're getting that massive reaction out of the FOMC, what seems like a daily basis. So, or just out of the Fed, every time they talk and every time they're in front of a camera, the markets are reacting. So the FOMC minutes was a pretty big deal today, and the market responded pretty well. If you were a bull to the short side, if you were short, this is one of those things I was even thinking to myself, I'm not short on the market right now. I'm actually slightly long. But if I was short coming into today and I started seeing the market take off after the FOMC minutes, I would have been a little bit weirded out about wanting to hold that position much longer, considering how long so many of these shorts right now have pushed those bearish positions. It's like, what point are you looking to cover here? Because there could be some pretty wicked short covering bounces in the near future for the market. Surprised we haven't got it yet, though. I will say this. Since the bottom from last Friday, the stock market is actually up 4.4% since the lows, since SPY hit 480 on Friday. So a mild bounce, not a massive bounce. And then after the earnings, I just had mentioned, Nvidia reported they came in with $1.16 versus $1.29 expected on the earnings. And then when it came to the revenue, they came in at $8.29 billion versus $8.1 billion expected. So there was a miss there. They're selling off initially, but you got to remember too, the earnings reports are very difficult. One of the main reasons why I don't play earnings is because they're so hard to predict and predict the market direction on, or predict the stock's direction on them. So even if you get the let's say if you predict it to the penny what the earnings are going to do and what the revenue is going to be, if you predict it perfectly, you can still predict the market direction wrong. And so, or the stock's direction thereafter wrong and how it reacts. So if you don't, you can have all the information, but not really know how the stock's going to react to the earnings. We've seen a lot of times, and it's not been every time, but we've seen plenty of times where a stock will actually report good earnings. They'll report good revenue numbers and even a good forecast. But what happens? It sells off, and it can be really, really frustrating for traders to play them. So from a trading standpoint, it's different from a long-term investment standpoint, but from a trading standpoint, I'm not interested in holding stocks through earnings. That's why I'm not trading Nvidia right now, because I don't want to play the earnings. I don't know which way it's going to go. And right now we're seeing some selling in it. It closed the day at around 170. It's trading at about 156 now. So it's down 2.8%. That's going to have a bit of an effect on the NASDAQ and to a lesser degree, the S&P 500. So it's not having like a Snapchat effect. And the reason why Snapchat was so much worse is because they had just a very grim earnings outlook on ad sales, which is a big part of a lot of tech companies' revenue drivers. So we're going to get into some charts here. We're going to get into the SPY. We're going to get into the Qs, the Russell. We're going to look at some indicators. We're going to get into your charts. We're going to go over Nvidia. But first, make sure that you've pounded that like button, subscribe to this channel, and check out the join button, man. I send out my market research each and every day through the join button, through the YouTube membership if you're watching on there, or you can go to Swing Trade in the stock market, which is pretty much the same thing. So check out both of those. It also supports this platform. Let's look at the SPY chart first here. And I got to get this up here correctly. Actually, let's look at Nvidia first, huh? Let's start it off with a stock this time. Nvidia. So this is post-market. This is a weekly chart. Looks pretty rough. And then when you zoom in on the daily, you can see it has given up all of the gains. And then let's go down to the 5-minute chart. And this is where the real action is. So there's a little bit of a willingness to bounce here. You know, once their conference call starts, I don't know exactly what time that's at, but once that starts, you know, all bets are off. They could say something that actually gets investors pumped, and they can look beyond the miss on the earnings, and it can shoot the stock right back up. So again, reason why I don't play earnings, because they're very volatile and very unpredictable, and technical analysis doesn't matter too much if it's a real bad number or whatever. But one of the things that I would say about Nvidia is to watch this area of support for the chart. I mean, it has a pretty significant level of support here that goes all the way back to August of 2020 that has not been violated, but you can see where it's starting to pull back to that level and maybe even test it. So that's going to be something to watch in the coming days. You've got about a range between about 120 and 150 on that. It's a big range, but you can see where it's been a lot of time in 2020 and early part of 2021 before it took off. I also mentioned I did a Tesla video yesterday and on YouTube, and I posted it, so you can check it out there on my YouTube channel. But I mentioned that you're seeing a lot of froth coming out of a lot of stocks, and some sooner rather than later. And what I mean by that is, like, you've seen the huge declines in PayPal, and you've seen the big ones in like Square, right? I mean, massive amounts of froth. I mean, this is froth here, okay? This is what happens when you create a very easy money environment, when you had the rescue plans and the PPPs and all the stimmy checks that were going out. Stuff was propping up a lot of stocks. You saw that with Tesla. I mean, I know it's a kind of a messy chart here, but look, this is actually the chart from last night that I was using. But look at the froth in it, and it's coming down. I don't know how far it's going to go, but I'm just saying there's a lot of froth, and Nvidia is no exception. I mean, this whole area here, okay, this going all the way up, that's a lot of froth coming off of those March 2020 lows, and it's giving back a lot of it now. We're down 50% on Nvidia off of its all-time highs. So keep that in mind with a lot of these like very frothy plays. Yes, I think we're due for a dead cat bounce, but I don't expect that dead cat bounce to hold. I think there's probably going to be lower prices at some point in the future, but it's just very difficult to sustain that the entire year. You have to have some dead cat bounces along the way. You go back to 2008 and 2000, you saw multi-month bounces at times. I think 2000 had like a 3-month bounce, and 2008 had a 2-month bounce. So they do happen. And even we had, I think, the other significant period of selling prior to this one here in terms of, you know, lasting longer than the 5-week sell-off from March of 2020 was the one in Q4 of 2018. We still had a heavy sell-off, then we followed by a 1-month bounce and then another month of selling before we finally bottomed. So Nvidia, not looking good initially here, but it will definitely be interesting to see if the buyers buy the dip here, especially considering how close to the support level Nvidia is. Now, let's look at SPY here. This declining level of support has been very interesting to me because it keeps bouncing off of it. 4 times now we've seen some attempt at a bounce. And all those little dotted lines, that's Fibonacci retracements, and I'm going to get to that here in just a second. But this declining support level here, 1, 2, 3, and it didn't bounce too much right there. But then we got a 4th one here that it did bounce yet again, and it's yet to even put much of a bounce together. Like I said, 4.4% off of the Friday lows. However, if you get a 38.2% retracement, that's going to give you a price target of about $412. That's about $16 away, or about another 4% to the upside. If you can get up to this 50% retracement, you're looking at more of like a move to 422. Best case scenario for me, or something that would leave me kind of excited, would be if we could get into like a nice dead cat bounce that takes it back up to 61.8. If you do that, you have some support areas right there to be aware of. It's not a perfect support that lines up perfectly with the 61.8, but it does have some importance to it just below it. So I can see where we could bounce up to 61.8. Remember, you know, you go back to 2000, 2008, you go back to 2018, even 2020, there's always been these fib retracements that take place. Most of the time, especially the early on bounces, we see retracements that take us back up to the 61.8% level. So it'll be very interesting to see whether or not we can get that here. So I see all your questions coming in. Keep posting them. We're going to get to all those charts. I love going through all of them. And last week, you guys had some great ideas, man. And I love going through them. Some of them that I hadn't seen yet. So I'm excited about getting to y'all's charts here in a second. It's just, this is kind of like the customary thing where I go through the charts, give you some opinions on these charts and what I'm seeing. So SPY here, you got the level of resistance just below the 61.8% level. But you can see we've yet to really put much of a bounce together. Maybe a 23.6% bounce if you consider today's highs, but not much beyond that. Usually we get to about a 38.2 or a 50% retracement level there. So QQQ, again, the same kind of declining support level there. Oh, let me go back to the Qs here, and then I'll jump back to the SPYs. But some resistance here at this 305 level. You have a similar resistance level short term on SPY. That's what I was going to point out. But also you have a declining trend line here, and we'll make this, I don't know, let's we'll make this a different color just so you can see it a little bit better. But this support level is I don't think that worked. This declining trend line has rejected price on multiple occasions. And right there, see that white line? Continues to reject price. Haven't quite got there yet on the daily here, but we're very close. So if we get a rally tomorrow that takes it back up to 302, that'll be an important test. Now, for a little bit of hope, you have the same trend line in play here as well. But guess what? It actually broke it today. Despite the selling at the end, it finished just a shade above it. Now, it'll need that follow through just to confirm it, that it's not just sort of like an aberration, that it can actually push through it. So that's a chart. That's a decline trend line that's definitely worth following. On the Qs, it's the same thing. IWM has a little bit more of a bullish divergence of late. It's had some, especially when you look at it from the 5-minute chart. You can see where you have like a kind of like a double bottom right there, but you also can see where there's been just a very nice trend of lower of higher lows. So a higher low here, a higher low here, and a higher low there. And now, can it like break above this resistance? It kind of did intraday today, but it couldn't hold it into the close, which was disappointing from a bullish standpoint. Bearish standpoint, you're probably wiping your brow saying, phew, okay. Quick check again on Nvidia, because I'm watching this stuff real time with you guys. Seeing a little bit of a push. Ignore these tall tails, candle shadows. I mean, that kind of happens in after hours trading. They don't really mean much, but yeah, a little bit of a dead cat bounce there. Maybe it can materialize into something more and open up in the positive and give the market a little bit of a much needed positive driver for the markets. So we've talked about the Qs, we've talked about the Russell, we've talked about Nvidia, we've talked about SPY, FOMC minutes. Okay, and then we'll get into your questions here. So what we saw with the FOMC minutes, market seemed to like it. Wasn't quite sure of it at first, but remember, anytime there's these big announcements, whether it's the Fed minutes or the FOMC statement, more so with the FOMC statements, just the time that we're in right now, the FOMC minutes is almost like a Fed statement. But you get a lot of fake outs at the beginning. Like people will say, oh man, did you see that move? I'm jumping on it right now. And then they all of a sudden find out like, man, I got in way too early. I was suckered into that trade. Best thing to do is like give it some time to settle in and let it have those fake outs. Like initially you had a fake out to the upside, and then you had a fake out to the downside here and let's pull it up on the 1-minute chart here so you can see what I'm talking about. These fake outs, they suck in a lot of people, and some people are playing options intraday on them. So they'll be like, okay, I'm going to try to, do a straddle here to where I try to play the upside and the downside, and I'll close out each possibly for a profit. So you get that upside swing, then you get the downside swing, and then you get that true move. Sometimes it'll start off down and then go up, and sometimes, but you always have these fake moves, it appears, unless they just come out with raging bullish news like QE forever or something. Then the market's not going to have any fake outs. It'll just go straight up. Let's get to your charts. Man, you guys gave me a lot to work with here. Of course, we got a GME guy here to first. Look, man, I think the whole trading GME is kind of stupid, but if you made some money off of it, that's good. I did a video off of it, back off of the stock split. When they announced that initial stock split, and people hated on me. I've never gotten so much negative feedback in my life. I was like, guys, don't buy this thing at like $199. It's stupid. And everybody's like, oh, it's a stock split used as a dividend. And they clearly don't know what a dividend is. It's like dividends. If it's $1 dividend, then they're taking that out of the share price and giving it to you. That's how dividends work. And so whether or not you want to classify it as a stock split, as a dividend or whatever, it's still the same thing. It's going to be a stock split. Okay. It's not something unique just because they classify it as something else. They're going to split the stock. It's going to go in half, and then, or whatever it is, maybe they split it by 5 or whatever, but you're going to see the share price go down and the number of shares that you get go up. That's how splits work. But they had it in their minds that it was something else. But funny though, after I did the video, it got all the hate for it. It goes from like 199 all the way down to the 80s. I mean, I hate to say told you so, but told you so. Okay, so Jaroslaw, I don't know if I said that right. He says, he made so much money on GME calls today. He. Any more ideas, man? I will revert them and apply. LOL. You're like a Kramer. Hey, how am I like a Kramer? I told you not to buy GME at 200, and I was right. You're the back holder. Sorry. Anyways, keep buying it though, man. You'll just keep giving your money to somebody else though. Enjoy. All right. See, I'm not afraid of the comments, guys. And by the way, if you guys are wondering, what am I drinking? Oh, I didn't bring the bottle. It's Buffalo Trace. It's good stuff. I like it a lot. I've been finding them on the shelves for once, you know, which is nice. I've been picking up a few bottles of it, so I'm enjoying it a little bit more often than I usually get to. I feel like I'm talking fast as lightning today, man. It's like they put something in the bourbon or what? All right. So Alex, he asks about MU. This has been a stock. I've been watching this one for a long time. It's like it's got a double bottom or a double top. Excuse me. Definitely not a double bottom. Double top that is plain as day. Plain as day. I mean, you're thinking, okay, this is an ugly topping pattern. It's also a very undervalued stock for the most part compared to all the other tech stocks and semi plays. Very undervalued from a PE standpoint. This would be one that if this market goes much lower, let's say this thing can dip down into the 40s or 30s or something, that would be something that I would be really interested in buying from a long-term perspective. But in any case, MU holding support here. And you've got this like 66 magnet that it just keeps bouncing off of. It formed it back in October of last year. And then it's tested 3 times, creating this like triple bottom scenario here. Now, if it breaks below this thing, and I didn't probably draw it perfectly straight there. There we go. If it breaks below the support level, that's where, okay, I don't want to be in it. And it's close to doing it. I mean, it's like a 2% sell-off and it would be below support practically. So I don't like that aspect of it. You also have a declining trend line that's, you know, weighing down on it. So every time it gets this bounce, it keeps getting rejected in price. A couple of things that needs to happen here. Continue to hold the support level. That's critical because if you don't, then you're confirming a massive double top pattern, right? And then it needs to break this declining trend line at about, well, currently standing at about 71. So good chart, Alex. I mean, I really like MU. I think it's pretty admirable how well it's hung in there considering Nvidia and probably MU, because I got the post-market price action going on here. It's probably affected some. Let's look at it from the regular hour standpoint. Yeah, so it actually finished about a percentage higher than what it's doing after hours. So then Bitcoin chart. Let's pull it up here. Right there. This is Trading View. Let me put the also, you have time look at Beyond Meat. I heard British podcast today that it's a good short opportunity. Yeah, I think with Beyond Meat, it's got something to do with Kim Kardashian or something. I think the last time a Kardashian got involved with the stock that I can remember recently, I think it was one of the Kardashian kids or what. I don't keep up with the Kardashians. Isn't that the name of the show? Yeah, I guess it is. Crap. But anyways, though, they mentioned something about Snapchat and caused like they didn't like the platform and it caused it to tank. I think that was like 2017 or 2016, but it was crazy. Like stock completely plummeted off of a tweet or something about Snapchat from one of them. But looking at the Bitcoin here, let's pull it up. So if you remember, and it's very similar. I mean, it's not related, but I mean, it's very similar to the MU chart that I just looked at. Massive double top pattern, but it doesn't seem like it wants to break below it. I mean, look at this. This is, I'll just extend it out a little bit further, but it keeps riding this $28,000 level and holding it. So it's yet to break it. And it's holding it really, really well. So right now, personally, I wouldn't want to be shorted until it can break below it or sell it unless it broke below that level. If it broke below it, then I wouldn't want to be in it. But right now it's holding that support level. Until it can't hold that support level, I would be looking for the bounce. It's definitely oversold. Just even looking at some of these indicators here, like the RSI, I mean, it's pretty rough looking. And then Beyond Meat here, let's go ahead and look at that one as well. So this is a perpetual downtrend, and it's been that way for a long time. I mean, I remember people loving this stuff, thinking it was going to take over the world. But you can say, okay, let's short it. But I mean, this stock is a stock since July. It's been shorted for a long time, pretty heavily. I mean, it goes back to June, July of last year. It was trading at 160. Now it's at 25. Is that something that I really want to be shorting at this point, to where maybe you start getting a short squeeze at some point, especially if the market starts to squeeze higher? That would be one that I don't necessarily want to get into. Also, just shorting in general, I'm a little bit leery of right now, because when you take a look at the SPY weekly charts, let's just take all the lines off of here. SPY weekly charts. You got 7 days to the downside, 7 weeks to the downside. It's trying to make its first bounce in over 7 weeks. If it finishes red, I mean, it's going to be like another historic week, 8 straight weeks, right? I don't even know last time that happened. I think it might have been 1980. SPY, then you have the Qs, another attempt barely hanging on to the green there. And then you got the Russell, also just barely hanging on, also barely hanging on to the 200-week moving average. So you're shorting in a market at this point that would say you're sitting on a possible pile of dynamite. If there's a hint of good news that comes out, or something that the market can rally behind, you may see an onslaught of short covering that could really make for a bad trade. Ben telling us earlier that Nvidia clapped the market. Surely it did. Skyheart, right back at you. DKNG. Let's look at this one here. Get off of that weekly. Yeah, so it reached like $10 a couple of weeks ago, and even that one had my attention. I was like, man, this is like getting into some like rare air, right? I mean, going from 70 plus all the way down to $10. I could see where, I mean, that's basically price levels before it ever really got hyped up, right? And then you had all the froth that comes. So it's coming back down to pre-froth levels. Another really good example of how many stocks are losing all of that 2020, 2021 hype that they benefited so much off of. DKNG is no exception. Probably one of those that, when all is said and done and this market's finally settled down and found its resting place, could be a stock that I would want to like put some long-term cash in. Not a ton, but I mean, if this thing does, just remotely good long-term, it's good. It'll be a good one. But I don't see sports gambling going away. It's an addiction that a lot of people have. So I mean, I see it probably as, like same realm as like tobacco or beer, some of those stocks where it's not a staple necessarily at this point, but kind of to a lot of people it is. All right. But DKNG right now kind of got this head and shoulders, inverse head and shoulders pattern it's working with. I saw this on Spotify today too. It's not an exact one, but you kind of have like this left shoulder head, and then it kind of just peters out. Maybe you could even say it's a cup and handle pattern. Maybe that's the better way to categorize it. You got the cup, and you got this handle pattern right there that it's working. So if it can break, say tomorrow, it can break above today's highs, which would be like 1428, because it's yet to break above this breakout level. Let's be a little bit more conservative. Let's say maybe like 1433. Then the stop loss probably would be below the May 20th lows at 1317 or so. So it's a little bit of a wide stop loss, but it's like 7+%. But one that I think is worth keeping an eye on. DLTR. What do we got with DLTR here? Well, you got to remember too, we got Costco. I don't think they reported today though, right? I think that's tomorrow. Which one of the sectors I was looking at getting into, because they had just been beaten up so bad following the Target earnings, was XLP. It's the staples sector. I didn't want to do it just because of Costco, because I could see where a bad earnings report like Target with Costco would probably be even more impactful to the overall market than Target. So Target, man, that was a real crapper. But Costco, or we're not even talking about Costco. Where's Dollar Tree at? Right, Dollar Tree. There is a level of support here that it keeps holding. This little support here following a gap up in November of last year. It's holding this support level. So it's really impressive. It's holding the 200-day moving average as well. I like the idea of it maybe getting back into this gap here. If it does that, that gives you like a possible 133 to 155 move, especially if the market's willing to reciprocate it. The only thing is that you got Costco earnings coming up, and if they crap the bed, I don't know if I want to be in Dollar Tree when they do. So it's kind of like, let's let this one pass. Maybe Costco has phenomenal earnings. I like Costco at least. Just, you know, going there from a customer standpoint. But dude, if their earnings doesn't come in good, it's going to be bad for like your Walmarts, your Dollar Trees, your Targets. So looking for a short play on Disney. Now, why would you want to do that to Mickey Mouse, man? Actually, not getting into that. That's a politically loaded question. I'm not doing that one. Sometimes I got to think. But okay, so shorting it, this kind of goes along the lines of Beyond Meat, right? This is a company that it's gone simply from like 329 down to 102. So you're getting close to like what, 25 to 28% of a sell-off. And Disney, is that really at this juncture? Even if you get, okay, it bounced 1.5% here, I would not personally want to get short on it. Okay, if it can break this, what is the lows here? 99.47. Yeah, maybe it takes another leg down. But man, I preach a lot about you got to be a little bit anticipatory, where it doesn't mean that you call market tops and market bottoms or whatever like that. But when you start to see that initial breakdown, so what I would be talking about here on Disney would be like this here. See this clear level of support. You see where it's held it bounced a little bit, but then you're like, okay, if it can break below this key support level, it's had a couple months of consolidation, then I'll get short on it. So you see this candle right here, and then you get short. That's anticipating like the bigger move. You're waiting for a confirmation. Right here, yeah, I mean, you could do that, but guys, it's fallen from like, I said 130. Actually, it's more like 140. So it's gone from like 140 down to 103. I just don't think I want to put my capital in that kind of a situation. And like Alex said, don't forget to like the stream. Also like to see what levels you see with open and WBD. All right, let's look at some open and some WBD. And don't forget too, I'll have this will be posted. I'll have it all annotated with the chapters and everything else afterwards. But so with open, yeah, you definitely have this like declining trend line here that's going on. It's yet to break above it. So I think it really needs like 747 to 750 to break above it, get above these moving averages here that are pretty thick and weighing heavily on it. Yeah, I mean, the 50-day moving average, also the red line, it looks like it has rejected price numerous times. So that's another obstacle. So you almost need it to just break through all the moving averages, including this declining trend line. WBD, Warner Bros. All right, so got a breakdown of key support right there. Now it's consolidating some. Okay, so if you want to play the dead cat bounce on it, this is how I would see it. You got a little bit of a basing pattern here, and over the last few weeks, if it can break above this level right here, okay, if it can break above, what is that, about 1842? Breaks above 1842, then you have a potential run into the 20s if this market can really take off. Possible resistance right here at about 1980. And but outside of that, there's not a lot of resistance to get in this thing's way, especially if the market can put together like a 8 to 10% run from here. And I know it sounds great. We talk about 8 to 10% runs, and we've been down like 7 straight weeks. But that's what happens. The biggest bull market runs happen in bear markets. Like the counter rallies are brutal. It doesn't mean that they're going to last, but they're pretty bad if you're caught short in them. All right. So thoughts on RDBX and a play right there. This one, man, it keeps popping up on my radar from people just talking about it a lot. I mean, I know there's a lot of fanfare behind it, but look, there's resistance here at the 200-day moving average. We don't want to play that until it can clear it. The other thing, it's trading below $10. It's in that WSB crowd, which can cause a lot of headaches if you get caught in the position at too high of a level and it starts to pull back, because most of these things are pump and dumps, right? I mean, look at the one from this week and last, SIGA, whatever you call it. SIGA. Everybody was talking about that one where it's gone from 15 down to 8. So people who got in at like 14 something, they're almost down 50% on their trade. It's just not worth playing some of these crazy plays. Redbox, I don't even know what the hype is about them. I'm sure there's something that somebody's saying that it's going to make it really advantageous, but I mean, it had a pump and dump back at what is October, November. What did it do? I mean, it finished off worse off than before the pump and dump, going from like 27 all the way down to $1. And now here we are again. We're pushing it. And yes, maybe it makes another run. Maybe we get another one of these dojis, but I mean, or not dojis, but big shadows on a blowout candle. It goes all the way up to $11, and then we're back down to $2 again. So these are the kinds of trades that have a lot of risk to them, where if you're wrong on it, you're going to just be royally hurt from it. And there's not really a technical edge there. There's some resistance at the 200, and that's about it. Been watching ROL. What are my thoughts? Rollins. Look at that, man. You guys see what I see right out of the gate? I mean, it's kind of these are the kind of things that you want to like stick out for you. But it's a inverse head and shoulders pattern right there. I mean, how often do you get those in a stock these days? Not a perfect one. Maybe I just need to draw it better. There we go. So left shoulder, head, right shoulder, and then 36.44. If it can break above that, then you might have a little bit of a trade on your hands. Stop loss probably right now would have to be below yesterday's lows, so that's going to be at about 34.45. So yeah, that's probably how I play it. It's a good looking chart. I'll add it to my watch list. So thank you for bringing that one up. Give you a little clapperoo. All right, looks like we got some more questions there. We already answered that. My life is oh my gosh, spare me on those people. What do you think about the Fed's comments? Yeah, we caught that one early on, so I'm sure you probably already heard that. In terms of like short-term, long-term importance, no, I think the market kind of digests it and moves on. Sometimes we will see reversals the following day. We saw that with the last Fed minutes, but you know, that's just kind of like you got to play that by ear almost. Let's see. ORGN, what's the sector? Yeah, I mean, so ORGN, it's been doing pretty good. We talk about this on a this particular stock a lot on this stream. Still has some resistance that it needs to break above, but if you look at like ALB, look at this one. This is a chart that I've also been following. You have a inverse head and shoulders on this one. So this is a stock that's held up really good. Specialty chemicals, ORGN, both of them are in the material sector. Material sector has done pretty well for the most part this year relative to the overall market performance. It's been sideways for, you know, more so than not. But it was just April 21st. It was hitting new all-time highs, or trying to make new all-time highs. So about a month later, it's pulled back some. A lot of pressure so far in the month of May and April. So that's not so much of a concern, but overall, it's held in there pretty well. So yes, to answer Barry's question about ORGN and sector strength, that's definitely the case there. And the industry is pretty good too. At least it has been with ALB. So let's look at, see if, yeah, industry is really good too with chemicals. So AMD just released a new line of CPUs. I think I have some of their components in my new computer. Do you think that it would be a bad idea to go long on AMD, or is the PE ratio still high? I think, I mean, it depends on how you're trying to play it right now. So if you're trying to play AMD from a long-term standpoint, that's not something that I would necessarily do. I think, again, we talked about froth in the market. This is, you know, the froth, you know, going from like 49 all the way up to 165 off of the March 2020 lows. It's not as bad as some stock, but man, it can definitely come back some. I mean, it's almost down 50% off of the all-time highs. You're going to have some key support moments here that come up at some point, possibly with, about 74, 75. That's one area to possibly play the bounce from. You got another one right here at about, 59. So you also have a long-term trend line here. Let's see what we got with a long-term trend line. Yeah, I mean, let's try to draw that better. Okay, yeah, so I mean, that could be in the 50s or low 60s when it gets down to it. Jeez, Donnie. That's a you don't have much room to work with there. Yeah, I mean, I don't consider myself necessarily an expert in options, so I don't try to get too much into the probabilities of something happening or not. I think the market's personally oversold, setting up for a dead cat bounce. Huh. He really is. Dude, Kramer's got to be the worst. But DBD today, Diebold. Yeah. I mean, if the tech sector can work its magic here and get a little bit of a bounce, I mean, it doesn't look like. Let's get a quick update on Nvidia here post market. Yeah, I mean, it's definitely not necessarily at where it was prior to the close, but it's yet to like completely fall apart either. So, but Diebold, the thing is with Diebold, it's a cheap stock, right? It's a $3 stock. Sometimes it may not necessarily go the direction of the market. So if the market gets you a bounce, it may not go with it. It could, but not necessarily a guarantee, because these companies that are trading under $10 and $5, they kind of march to their own drummer. But in these kind of markets, when things get really bad, I want to focus on more of your value plays. Right now, I'm doing a lot of ETFs like QLD. I'm in SPY. Very boring on the surface, kind of like, but they give you enough action in a market like this with all the volatility that you can get some decent returns. And so I'm just trying to add profits to the portfolio in times like this. I'm not trying to necessarily hit it out of the park, because doing so can really set you up for some really bad trades. DBD would probably be what I would consider a high risk trade. There's a lot of stocks out there at a discount that for me, I would rather be buying or putting my money towards. Wayne with Black Sky. Whoa, what am I doing here? Oh, goodness. 89%. I mean, you can chase these things, right? But you're asking for just misery on most cases. These are pump and dumps. So they get it like a good news. And I don't even know what the news is on this thing. So I'm not trying to act like I know anything intimate about this stock. But these kinds of these bars, I mean, it usually just sucks in a lot of bag holders. People get into them and then they lose a lot of money. It's best to stay away from them. If I don't know anybody that's ever made a career in trading off of trading these kinds of moves. It just doesn't happen. I know it got popularized by a certain penny stock promoter a long time ago, like shorting them and playing them and all that. I don't know anybody that gets them. Let's see here. Daniel Mendez asks about how high can natural gas go, he asks. Thanks. This is something that people hated on. Like it would go down as sure as the sun would go up in the mornings. This thing was just a perpetual, just a money pit. I mean, look at it. UNG. This is UNG over the years from 2008, just completely fell apart. Look at it. The last really incredible run that it had was 2008. What was 2008? Great recession. So just kind of interesting. It eventually fell apart, but you're getting another good run out of it right now. Let's see. Yeah, I mean, that's kind of an inverse head and shoulders breakout. Left shoulder right there. Then you got the head. Then you got the right shoulder. Now it's got the breakout. Technical standpoint, I don't chart this one too much, but I mean, it broke that downtrend pretty well. So, I mean, you can't go back too far before you just completely flatline on the stock because of all the inverse or the reverse splits that they've had. But probably for me, where I would be watching the stock is probably at this kind of a key resistance level here, maybe at 40. I can see it getting up to 40. I mean, it's done it in the past, so I think there's a good chance of it going there as well. VRM. What have we got there? The UNG. Okay, I was just making sure I was giving it to you on the. Okay, so VRM. Yeah, this is another one. I've got nothing on this. I mean, just a perpetual decline in a stock. Yeah, these are just stock. I mean, this is why you got to have, especially if you're going to dibble dabble in these kinds of trades, you've got to have stop losses, man, because it's going to save you from a lot of heartache. I would never be buying stock like this. That's me. I just don't see. I mean, sure, maybe it gets a WSB pump, but you could be holding out for that forever, and who knows if that'll ever happen. XLE, do we miss a trade? You know, I haven't gone into too much energy in this market here just because you kind of wonder how long can this thing just keep going higher. But yeah, I mean, XLE, I don't know. I feel like it's due for a pullback of some kind, but sucker just keeps on trucking higher. And like I said, I've stayed away from a lot of the individual stocks. Almost got into a sector ETF, but I mean, it's still bullish. I mean, look at it. I mean, over the course of this past year here, I mean, it just continues to trend higher week after week. So it's like the one long play on, you know, from a sector standpoint, from an individual name standpoint, like SLB, Hess, Chevron. I mean, they're all still doing really, really well. I think Chevron has a little bit of a unique play right here. They got the big dividend, and it's trying to break out above this resistance level. So that's pretty good as well. That was Alex Ramirez asking about that one. Let's see. All right. John O'Neill asks, and we'll close up with this one here. Costco. Got that long-term trend line right here coming up with earnings. Maybe there's like a pullback to this 376 level. There is some. You see how I've drawn it on. Yeah, I think for me on Costco right now, if I'm looking to play it, it's probably going to be off of this long-term trend line. That's what I would be looking at. It needs to stabilize. Maybe we get a nice bounce here in the market in the short term. It can go up to 464, and then when you get another leg down, maybe that's when it comes back down and tests this 373 level. So who knows? That's me just theorizing. So remember, guys, like, subscribe. Make sure you get the notifications. I do these things on a week-to-week basis, and then I also do a couple videos a week. Except for going into next week, I'm going to have a little bit of a vacation here. So I won't have access to doing new YouTube videos. So I will be doing these again right when I come back. But I need a break like a lot of you guys need a break in life too. Going to take the family to a pretty cool place in the mountains. So I'm looking forward to that. And we can get a little bit refreshed. God knows that this market this year so far has been just wild. And there's nothing better than a little bit of a relaxation. I'll still be keeping an eye on the market just because I don't want to become out of sync when I come back, trying to get the feel for it. But that's what I want to do. And my niece is getting married this weekend, so to Shelby, wish you the best. And I was trying to think of something funny to say, but nothing came to mind. But I'm DJing the wedding. I've never been a DJ before, so that'll be fun too. Looking forward to that, and try to embarrass some people when they give me the microphone. All right, guys, I'm going to wrap it up here. Until next time, which will be probably in a couple weeks. Thank you, guys, and God bless.